Welcome to another episode of the Untangling Web3 podcast. Today we have a very special guest, Johnny Garcia, joining us on the show. Johnny leads the VeChain Foundation's institutional adoption strategy. Prior to joining the foundation, he was director of ETF and ETP capital markets at Bitwise Asset Management, where he played a key role in bringing the firm's Bitcoin and Ethereum ETFs to market. Bit of a non-traditional background, his career not only spans traditional asset management roles, but he also served as an officer in the United States Army. So let's dive straight into it. Johnny, welcome to the show.
Awesome. Thanks, Jack. It's wonderful to be here.
Very glad to have you on here. We did a whole episode a while back on TradFi, DeFi, and the TLDR was TradFi is so complex and so difficult to kind of understand what the hell's going on. So many acronyms, so many terms. And that's why we got you on, Johnny, because you understand this space. You've come from this space and now you're moved into the crypto world. And yeah, let's just jump into it. What the hell is an ETF?
Well, long form, it is an exchange traded fund.
Okay.
But yeah, no. How do we imbue a little bit of fun into this? Because quite honestly, I'll be honest. Like I'm a little over the typical sort of boring approach towards how we discuss financial products. But I also understand that you have to give the usual disclaimers that none of this is financial advice. It's all sort of based off my own personal experience. But yeah, ETFs, and why are they a big deal? So let's see. It all started after the October 1987 crash.
Okay, wow, a little history lesson to start with.
Yeah, a little bit of history lesson here.
Nice.
The oh my goodness, it was the Monday or Friday? Doesn't matter. It was an October 1987 crash. Where in essence there were a number of folks that were sitting at this desk that wondered, hey, this would be a really interesting way of quickly transferring risk. Why is that? Well, we have these various vehicles that pull together a bunch of individuals' assets, and they're all exposed to, you name it, stocks, bonds, fixed income instruments, and the like. And a number of folks would love to be able to adequately price these things out in a way, intraday, most importantly, particularly assets that aren't necessarily, that have like end of day, what we refer to as net asset value pricing, right? So if you think about traditional pooled funds, like a mutual fund here in the US, what happens is you don't really get a price on that until the end of the day. So some brainiacs at a desk, at a trading desk, had come up with this tool where, hey, what if we were able to price something out intraday, something that traditionally you don't have a market for? And therein lies the birthplace, the genesis block, if you will, of ETFs. Now, what is an ETF, and how does it like actually pertain to what to today's topic? It's interesting. Like I always like to offer up like a bit of beyond the history. I actually don't really talk about the 1987 October Friday crash often, but I really want to like provide a little bit of this may be pedantic, but there are differences with ETFs versus ETPs versus ETNs. So exchange traded products tends to be the sort of umbrella term, which basically describes a product that can trade on an exchange, aka you can get a price between 9 and 4, at least here in the US, 9:30 and 4 when the markets are open, or when the markets are open in other in say local markets, for instance. But the assets underneath change depending on the actual nomenclature. So an ETF tends to wrap the majority of the assets that are wrapped in an ETF tend to be stocks and bonds, right? And they trade in this fashion, what we refer to in the industry as in kind, basically saying, I have a set of constituents that make up the S&P 500, right? So I have the pro rata slice of the S&P 500 stocks. I want to give it to you, Alec, and you are an issuer. You give me shares that are a representation of that. What's beautiful about that is, one, I'm getting a price in the form of an ETF, right? You're getting the constituent shares that constitute the S&P 500. I'm getting exposure to that. But what's also beautiful about in kind is a tax treatment, right? So here in America, we're particularly focused on taxes. ETPs are different, and they're regulated differently. The market structure underneath, in terms of how we exchange assets for ETF shares, is different, and that here in the US in particular, but even in the EU with ETNs and ETCs and other ETPs, the mechanism's different in terms of the exchange versus a cash mechanism, right? So I give you cash, you then give me the shares, you then go out and buy the Bitcoin or buy the Ethereum. Therefore, now I have shares that represent exposure to the Bitcoin or Ethereum and the like.
Okay, I get you.
Yeah,
So,
so
yeah, so we've gone through like
I do
10
like to.
acronyms there. We've
I
gone through
know
like
there's
10
been so
acronyms
much. There's
already.
been so much. Yeah. And everyone's fallen asleep and changed my
Like, so my understanding, because I'm not from this space at all, and neither is Jack, and when we went into this, is that the point of an ETF was that it makes it slightly more accessible for people to jump into a space. It's like rather than owning, say, one asset, you kind of have a bundle of different assets, and it makes it, say, more appealing to an individual to jump into that ETF. Is that like a massive oversimplification, or is that the case?
No, it is the case. Yeah, I mean, if you think about the number of assets, like, it's geographically dependent, right? I mean, I
Mm,
think you really have to take into consideration that the lines of demarcation as it relates to how folks manage or gain access to
yeah.
various type of asset classes is very different um, once you cross over into another jurisdiction, right?
Yeah. Okay.
So here in the U.S., for instance, there's north of some $60 trillion in assets that are managed by professionals. What does that mean?
Okay.
There's some
Mm,
financial advisor who is managing assets on behalf of an end client. You, Jack, Alec, myself.
I get you.
Um, it's really easy when I've been buying and selling ETFs. And by the way, I've got a whole tech stack that shows me all my positioning. It shows me my
Mm,
risk that I'm exposed to. I can now just turn that over into a report and pass it along to an end client and say, hey, this is why you underperformed a particular market,
I
overperformed,
get
so
you.
forth and so on. It's a massive unlock because now if you're a financial advisor and you've been worried about whether or not my business is now being put at risk because I have clients asking me for Bitcoin exposure and I have no
Yeah.
view. I have no view. I have no way in
Mm,
which I can go and easily just start allocating to a particular market, right? Like otherwise I have to manage a bunch of individuals' wallets. I've got to figure out how do I put that into my risk engine. ETFs make it simple. It's like, oh,
okay.
okay, cool. We now have a house view that we're okay with allocating 1 to 5% to Bitcoin. I can now
Okay.
just go and buy an ETF and now Jack, you've got exposure to Bitcoin, right?
Okay.
It makes it tremendously simple. It's in a way that's folks like me have already traditionally been talking. You start talking about hard code wallets, hot
Mm,
code wallets, hard forks,
Yeah.
and consensus. Like people are like, okay, look, you know what? I'm done.
okay. Got you.
So it is a massive unlock for a very important and growing segment of the market in terms of traditional
Yeah.
asset management and financial services.
I get you. Like, I think my kind of how I would relate it to myself is I can't trade on, say, stocks, classic stocks and shares. I can't buy stocks from, say, the US market. But if I all of a sudden jump into a fund that's international and registered in the UK, they can give me exposure to, say, the US top 10 whatever stocks, and I just invest in them. I don't have to worry about the legislation, all the regulations, all that kind of stuff. So it's a similar kind of thing. You're saying that it's simplicity for the big players to get exposed to assets without having to worry about regulations, legislations, all this kind of stuff. They just give the money, pass it over, and say, "Yeah, we like Bitcoin. Jump into this for me and handle all that nonsense. And if I make money, if you make money, sorry, I make money." That makes sense, yeah.
Totally.
Okay.
Yeah. I mean, absolutely. I just go back to like it's a really massive unlock. Much like buying the S&P 500, buying a basket of stocks was a massive unlock,
Yeah.
right?
I get you.
Like now you and I all put our money in together into one fund. That makes it much more easier for us versus me going out and buying 500 stocks that make up the S&P 500, right? It
That
just
makes sense.
becomes um, just cost prohibitive, economically prohibitive. But it's
And is
also
crypto
easier for this management class, right? So
Is crypto special in any way? Like, is it the same as everything else? Like, I know there's been a lot of uncertainty about people, jumping into investing in crypto and all this kind of stuff. Is it like unique in that sense that it kind of these ETFs are kind of more valuable maybe for the crypto market as a whole because there's so much uncertainty about the classification or what it means for taxes and all this kind of stuff?
yeah, I mean, you hit a really core part of the argument, right? Which I think in part, so above and beyond making it easier and accessible um, for folks to gain access. So individuals like you and myself who perhaps don't want to be incredibly native, we just want access to the exposure.
Mm,
We don't intend on participating in an ecosystem, right? I'm not going to buy and stake ETH, and
yeah, yeah.
I'm not and vote. I'm not going to do that. I just want access to the price.
Mhm.
Um, so there's that, but then there's also this component of how should I be treating this from a tax component? Is it a security? Is it a commodity? That
Mm,
leads to very two different r- tax as well as regulatory regimes.
yeah.
And what is unique so far, at least about what's been approved here, in so much as we have ETPs that wrap or give you exposure to Bitcoin. So they're physically backed by Bitcoin, or give you exposure to Ethereum. We don't have anything else here in the US in the form of exchange traded. We have other forms, private placements, and the like. So what's the sort of important part to highlight here? Either you're a commodity or you're a security. So the ETF, the exchange traded part, the ETP part, that's managed by our local regulatory body, which is the Securities and Exchange Commission. The underlying market part, the Ethereum or the Bitcoin part, is in essence, because it's filed as an ETP, which it's a 33 Act form and 33 Act securities law and all that jazz. Now makes it regulated by the CFTC, so our Commodities Futures and Trade Exchange regulatory body. Very two regulatory regimes, very two different tax regimes. So that's the important sort of distinction here.
Yeah, that's really interesting. I think we've actually covered so much ground even in that opening introduction. So thank you so much. But I think I just want to highlight a couple of things. I think the ease of use and simplicity of just getting price exposure, I think, is the thing that people were so excited about. And I think the analogy for people who aren't so well versed in this is probably, especially in the UK, I guess, would be like an index fund, right? It's a way of getting broad exposure to a market or to some kind of stocks and shares, but in a very simple way. So people who don't want to stock pick, people who don't know how to invest, they'll chuck it in an index fund on Vanguard or something like that, right? So
Yes.
I think it makes that kind of process easier. Another thing I feel like I remember, correct me if I'm wrong, is it also allows people, the ETFs now, is it right that they allow people to invest in the US via their, we call them pension schemes, but your retirement plan, right? Your 401k. Is that right? I feel like I remember hearing that you can invest into ETFs that way. Is that right?
So it's platform dependent. I will say there's also sort of industry structural things that kind of get in the way, namely in the form of administrative cost, record keeping, and I mean the industry is incredibly complex. Honestly, we could probably we could spend. I mean, there's entire lectures dedicated, if not like full on PhDs dedicated to just.
Oh my God.
Yeah. Well, I'm just going
understand
off
the
the strength
operational
of
burden.
some news articles I remember seeing that were like people can invest in Bitcoin in their 401k now, and that was what I was remembering.
Yeah, it is platform dependent. So if you're
Yeah.
at Fidelity, for instance, right, and Fidelity has been very very forward, and I guess I mean I'd use the word like progressive, and as it relates to offering up exposure to the crypto or digital asset economy, namely in the form of one, they participate actively, right? They have their own Bitcoin ETF. They also have the 401k or our former retirement funds where they've made purchasing Bitcoin available as well. I will say, even thinking about pension funds, right, or retirement income DC plans, that's managed also by another regulatory body, right?
Okay.
It's managed
Bureaucratic
by
nightmare.
ERISA. Yeah. So I mean, it's
Clear as mud.
it's very it leads itself or lends itself to a very different set of considerations, which is why ETFs are they're ubiquitous. They're everywhere, right? They're a really interesting sort of technological innovation, if you will, as it relates to like getting in and getting out of exposure from the perspective of professional managers, right?
Yep.
Managing risk as well, right?
Yeah.
So it's not just a matter of like, oh, I want to gain exposure to price go up. I also want to be able to manage, the potential risk of price go down, right? So,
Yeah.
and ETFs allow that, and you can also repackage them in different jurisdictions. So we have UCITS and things like that out, and that now make them compatible to UK or other EU specific jurisdictions, right? But yes, it's. I would say that's probably going to be that's probably longer in the tooth or later in terms of sort of the life cycle of the evolution of ETPs and getting into. They're not ubiquitous in pensions here, to say the least. So
Got it.
so the idea of having like a Bitcoin ETF also being available in 401ks, with the exception of very few ones like Fidelity's. I just my personal view is that's probably that's lower on the priority rungs for
Sure.
most 401k providers.
Yeah, makes sense. And I guess maybe the most important thing to take away from that is that we are even having that conversation, because if you look back 2, 3, 4 years, the idea that the big financial institutions would be, getting to grips with Bitcoin and crypto in such uh, an involved way now, and actively, offering any products at all, seems a little bit bizarre now, looking back on some of the rhetoric we saw in the past. So if we cast our mind back to, I guess, basically 1 year ago now, right, when the Bitcoin spot ETF got approved, I think it was last January, because we were covering it around Christmas time. Everyone was speculating, which date is it going to be announced and these approvals coming through. I recall, the iShares, the BlackRock one, I think was something like the most successful ETF launch in history. I remember reading that somewhere. How is, 1 year on, how have they actually performed? What impact have they had? And what can we actually learn from what we've seen in the last year?
So yeah, I was going to say it was the most successful launch. It was also the most successful in terms of garnering assets for the first year.
Mm.
It's been quite historic. Yeah, I mean, and I would say, I mean, as a category. So generally speaking, if you think about like a category of assets that have launched, they were pretty unique, right? So first and foremost, January 11th, and this is I know intimately well because I was at Bitwise Asset Management,
Mm.
and this was 2 years in 2 years in into joining when I had expected for a spot Bitcoin ETF to be well, hopefully be available in the US. And then here we found ourselves 2 years later. So we were a part of the mix. This is quite historic in so much as there were some 10 ETFs, all providing virtually, I mean, no, all providing the exact same access to an underlying market, all lined up and launched on the same day. And I will say, a credit to this is probably going to probably fall on deaf ears, but a credit to the SEC in so much as they wanted to prevent what could ostensibly look like giving any advantage to one particular issuer by allowing an issuer to launch an ETF or a product in advance of others. So they gave folks, they said, hey, look, all the folks who have said they're interested in launching this particular type of financial product, you need to be ready by X day, and we're going to
Mm.
go live on Y day.
Okay.
And so that's why you saw this sort of bursting at the seams of ETFs, all offering the same exact exposure to the same exact asset on the same exact day. And so so that alone was quite historic. But yes, I mean, in terms of garnering assets, I mean, both obviously in the form of price performance as well as asset growth. It's been an incredibly successful launch, and I think in part, look, it's obviously a representation of the built-up demand for this
Yeah.
particular for exposure to this asset.
Mhm.
I think there was also, candidly, a lot of transfers. So some folks who had been, and I want to say this like with a caveat, but it's not in my view. This is not creating additional like buyers. This is not a this was this like, this
Yeah.
is in essence a movement from one particular wallet to another wallet, in
Okay.
essence, right? So there were a number of folks who were also likely, now that there's clarity around, hey, what is the regulatory regime and the tax
Yeah.
regime under which I'm going to live? I no longer need to hold it in sort of its native form. I can now hold it in this ETP form. But it was it's undeniably the most successful
Hmm.
um, ETF launch, both by asset gathering, both by number of products on listed on the same day, and performance. And Ethereum's right behind it.
Yeah, so
Candidly,
Johnny, I was going to ask you about this. Like, so I don't know what if it was just like speculation or just random news outlets or what, but one of the comparisons I saw was that the Bitcoin ETFs have been hugely successful. I saw like numbers of like 120 billion or close to of total assets locked up in these. And then there were some people, I don't know if it was like the initial stall or something like that, was saying that that story wasn't true, or that trend wasn't true necessarily for the Ethereum ETFs. Is that your opinion as well, or are you saying they're both like equally successful?
yeah, no, they're not equally successful. I mean, Bitcoin blew Ethereum out of the water.
Okay.
But relative to if we're benchmarking against the broader share of ETFs that have launched, Ethereum
Get
is
you.
very successful. I mean, tens of billions. Sure, it's not hundreds of billions,
Yeah.
almost $1 trillion or so in assets, I think, now in Bitcoin ETFs. But I mean, Ethereum was also quite popular.
Yeah.
There really are. I mean, there's no other comparison, candidly.
Oh, is it like you come from this world? So can you understand, or can you explain and give us some insight into why that is? Like, why is Bitcoin why is Bitcoin more well understood compared with Ethereum?
Yeah, I think it's had the benefit of duration in terms of it just being top of mind headlines. How many times? I mean, Bitcoin's died 1,000 deaths, right? What seems to be sort of like the staying mantra or proverbial saying now around folks when you think about like the CNBC or Bloomberg or various sort of media outlet headlines. Like this must be it for Bitcoin.
Yeah.
So I think there's that narrative. It's
Mhm.
also been one of the best performing assets,
Mhm.
and it's not. This probably doesn't take a ton of guessing, nor a ton of. It doesn't take a quantitative engineering or a mathematical degree to understand this. But humans have a tendency to chase returns, and
Mhm.
so naturally, folks are thinking, "Oh, wow, this is an asset that's increased, thousands of percent." Why? I'm sure I'll port in and think that that's going to happen in the future. So
Mhm.
look, I just think that there was just a lot of FOMO, and
Yep.
there was a lot of missing out that I think folks now have an opportunity to get in. Now, candidly, in more recent years, circa or sorry, not even years, months, um, the trailing, call it 3 to 4 to 6 months. There's also been the news and narrative around a softening here in the U.S. that I think has also added an additional sort of buoyancy, if you
Mm.
will, to the demand side for Bitcoin, Ethereum, and other altcoins as well. And that's namely around a softening of sort of the regulatory regime under which many crypto projects
Mm.
and financial supporters, right, namely in the form of venture capitalists and other folks who have explored various different ways of getting exposure, have had to endure in the past, not just 4 years, but in the past decade, of
Mm.
building businesses in and around crypto and digital assets. And so I think that's been, the election here, the change of administration, the change of guard has certainly been a bellwether moment as well.
And it's like, I guess, so on that point, is there two rough buckets to what the current administration in the US means for this space? One is around, say, softer regulation, maybe softer on taxes. I've seen a lot of the time for these assets and the gains that are associated with the assets. I guess that's the one bucket, so people feel more certain going to the space and more comfortable going to the space. And then the other one, is it around the strategic reserve potentially, and like all this potential talk about America putting some of their current strategic reserve into Bitcoin, all this kind of stuff, and the demand that could be created from that.
Yeah. Look, I think I'm a bit mixed on this.
Okay.
I do think that. Well, sorry. Let me take my personal view out of it for a second, and then I'll just and then I can on the back end I'll find and bring that into the view. Yes, I think candidly any sort of clarity would be great. I don't think anyone's looking for um, any preferred. Well, naturally, we all know how these things sort of work out. Of course, folks are looking for things that would be preferential to existing
Mm,
ways of doing business. But I think most importantly, any clarity, namely in the form of, hey, I'm not going to be debanked, or hey, I'm not
yeah.
going to end up with a Wells notice at my front door when I go to pick up my
Mm.
Amazon package. I'm not sure if that's actually how you receive it when you get when you get a law when you get a
Not
Wells
talking
notice
from
of
experience.
yeah. But no, I think that just the general fear of we're doing something that is quite innovative, that has the
Mhm.
potential to be um, really transformative, and yet we don't really know whether or not I could potentially be doing all this work, putting in all this energy, putting all this financial capital,
Mhm.
and so sort of sweat equity, only to effectively, be in a law, be in litigation or legal battles with the SEC, right? Like I think for the most part, people are like, "Hey, we would love to get to the other side of that." And so, what that looks like, time will tell. I mean, I think we've seen sort of a barrage of various early days in the form of executive orders and things of that nature that have alluded to, one, first and foremost, setting up task force, not only within the executive branch, but then also, well, not only within the White House, excuse me, but then also in various cabinets. So the CFTC, the SEC have also have basically given an indication that, hey, we are also looking at this and taking a very different approach than enforcement by I've already forgotten what the general term, enforcement by regulation by enforcement, excuse me.
Yeah.
So that is at least, it's a tea leaf. We'll see what's going to bear out in terms of true efforts there. But it's definitely that should bode well for the broader market, in so much as, look, you should feel comfortable that unless you're absolutely just grifting, like we're not. Well, not even that. Sorry, grifting is legal. Unless you're doing fraudulent, illegal activities, you're probably going to be okay. But more clarity would be great. Again, we see that standing up in different, even here, right? We're federal systems. Our states also have their own. Right? You see sandboxes being set up in places like Wyoming for folks to go and set up DAOs or experiment with various different types of technology.
Today's episode is sponsored by the VeChain Foundation.
Now, we often talk about how emerging technologies like blockchain have the potential to revolutionize sustainability, and VeChain is at the forefront of this green movement with initiatives like VBetterDAO. Let's take a closer look.
Imagine tracking small actions like recycling at low cost, making them valuable assets. These verified records build a massive collective impact, benefiting people through their own actions. Sound a bit complex, but VeChain made it fun. Explore our apps at vbetter.com.
VeChain's goal is to power a new era of sustainable solutions. So if you've got an app idea or just want to earn rewards for small, sustainable actions every day, go check out vbetterdao.com to find out more. And now, back to the show.
On the strategic reserve side. I mean, I feel like crypto Twitters. It gives
it's a mad space.
It gives and it takes, right? It gives and it takes. Yeah, look, my personal view is I think it's if it happens, it's hard for us to say that would not put demand side pressure on the price of Bitcoin. I should say demand side pressure for Bitcoin. Where the price goes, I mean, that usually just becomes an imbalance problem, right? There's more selling. It doesn't really matter. But I think generally speaking, most folks are saying, oh, well, you know what? There's a fixed supply of Bitcoin. This we know will then effectively be a sort of reoccurring cyclical buy-side action that's happening now from, if the US goes, then there's going to be sort of follow-on effects where others are then going to go. And so therefore we now know that it's going to be, therefore we now know that there's going to be consistent buying. Sorry. I think it's a little bit oversold to think that somehow makes it mainstream, right? A lot of risks that are just not being considered here. Namely, I don't know, the efficacy of the US dollar. Namely, again, whether or not, I mean, ideally, right? Like, how do we say that we also want the US dollar to continue to be the strategic reserve of choice, but simultaneously say we're looking to set up a strategic reserve denoted in Bitcoin. I think there's various different ways in which governments can get exposure, right? It's a different thing when you say, hey, you know what? I'm looking at it from the perspective of its investment characteristics, its risk return characteristics, right? And maybe you do that in the form of like a sovereign wealth fund, or you do that in other form. It's another thing to say, I'm looking to set up a strategic reserve. That's just my sort of personal view, and it seems a little bit contradictory to the U.S. dollar also being the reserve currency of the world. But maybe I'm a little shallow on that one.
No, I think it's actually a refreshingly kind kind of measured take on the whole thing, right? If you just go and listen to Michael Saylor and go on crypto Twitter, as you mentioned, you get a different picture, I think. But that's valid, and also I guess you can also factor in the fact that you've got Tether, being supposedly US dollar denominated. Maybe there's some bet about helping to keep that running as the main stable coin. There's all sorts of things at play in there, but there's nothing I want to speculate there about at the minute. I actually want to maybe shift the conversation onto this idea of utility that we've touched on once or twice, because when we talk about the ETFs and the idea being to get price exposure, right? Spot ETFs get spot price exposure to these underlying assets like Bitcoin. That seems to be quite a long way from the original vision or the original thinking behind Bitcoin, right? As a peer-to-peer cash system being used for payments, etc. People are now just, they just want those returns, right? You said chasing returns is this kind of inbuilt thing we have as a species, and we seem to be, in my opinion, getting further and further away from that utility idea in a lot of the crypto space, not least in this whole meme coin phenomenon, right? So the word meme itself is funny, right? Because you saying no, it's that's kind of the reaction I was hoping for.
I should mute myself now. Yeah.
Well, because you say the word meme itself refers to people just imitating other people in behaviors, and that's what we're kind of seeing on the whole price side of things as well, right? Is people are just seeing people are making returns, this highly performing asset, people just buying in, and it becoming the self-fulfilling meme. But what is happening with these meme coins themselves? We've seen the various ones launched over the last few weeks with the new administration. I've even seen, to tie ETFs back to this, I've seen as of yesterday, I think there's now meme coin ETFs being filed as well. So crazy things happening. What's your take on all of that? Like, should we be scared? Is there any value in any of this at all?
I guess my take is crazier things have happened. I suppose. But I'm just having a tough time looking for like coming up with an example off the top of my head. I think it is maybe we should take a step back and just think a little bit more deeply about what exactly is it that this particular segment, and what I mean is capital allocators or asset management. What do they? What's their value proposition? And what is ultimately their business model? And in essence, it's giving access to streams of returns to investors that otherwise, or to a client that otherwise would not have that access, or is too busy doing their own job. You're a plumber, you are a lawyer, you don't want to spend time thinking about how you want to deploy your money, but you do want your money to work. You want it to be deployed in a way that's efficient, that gives you return, right? So you have idle cash, instead of putting it in a savings account where it's giving you 0.01%, which is still a thing here in certain savings accounts here at certain U.S. banks. You can put it somewhere else and hopefully generate a return, because you don't need that cash, or you don't need that capital at that point in time. So so the business model for them is they collect a fee for providing that service. That service could be simple, like indexing. We talked about that. It could be simple, like offering spot price exposure to Bitcoin, ETH. Now Doge, which you're right, Jack. I mean, I've recently seen a filing from my last employers and others around offering exposure to meme coins, or offering exposure to prices on meme coins. And so I think, generally speaking, the way they see this is, if there's a market, if there's an opportunity if there's demand, and I can cover the cost of managing and running a fund, then why would I not offer it? I tend to think that you should probably have, something that's consistent with whatever your philosophy is. It's anchored to your brand. It's anchored to, because ultimately these things are still built on trust, right? These enterprises and these institutions are still built on trust, and also like being consistent with what they're offering. Credit to another former employer, Vanguard, right? I know they catch a lot of flack for not offering. I remember having, I have a brokerage account at Vanguard, and I remember going to purchase a product that I had just launched when I was at Bitwise, and I couldn't purchase it because they don't allow it. Some folks say, oh, it's incredibly paternalistic. Some folks say, oh, you're missing out on a ton, but they're the second largest asset manager in the world. I think they're doing okay. And it's consistent with what they've said before, which is, hey, look, we don't offer carte blanche exposure to anything. We believe that what we're doing is in the best interest of our clients. And so, do I get scared? I guess was the other part of your question.
Yeah.
I take comfort, and I know this may not, this may come off right. I take comfort in so much as it is managed. This is the antithetical. I think this is certainly antithetical to the space. It's coming from professional managers who are ultimately will be held liable if and when something goes wrong, right? And you take on those protections when you decide to opt out of going native and instead buying an ETF, right? You take out the risk of hard forks, of losing your losing your keys, of you remove that as a part of your equation, and instead you opt into something that's protected, it's insured, and you can sleep maybe perhaps a little bit easier at night. I'm not sure if you sleep easier at night candidly buying Doge, but
yeah.
This is where I go. It's a free world. It's a free world.
Yeah, I think it comes. It's reminded me of that whole debate. You get around health as well, and like the libertarian or the kind of less governmental approach of saying, well, people should be free to do what they want, don't overregulate. And I guess people should be free to invest in meme coins if they so wish. But maybe that's, again, I think you just highlighted one of the other benefits of the ETFs themselves and these products as an industry is, you'd probably much rather than buy the meme coin straight up. You'd rather buy it as part of a regulated wrapper by a pretty trusted institution. I think that makes a lot of sense. I think I would be more comfortable, as you say. I just probably wouldn't be that comfortable overall. And speaking of trust, we've spoken a lot about some of your previous employers, right? You've mentioned a few of them, but your current role is at VeChain, as you mentioned at the start. And I'm conscious we haven't spoken about it because I'm sure that is also involved in kind of driving institutional adoption of crypto and the industry in general. So can you talk a bit more about your role and the role of, I guess, trust in these institutions as well? If that plays into it, I'd be very interested to hear.
Yeah, no, I'm certainly happy to go in that direction. I was going to say I will deviate just here for a second and say, I mean, my view here, and I feel like I've I don't know, I've spent certainly the last week, 2 weeks, doing a lot of internal investigation as to what and how I think of memes, and I think there's the component of like I have a deep appreciation for incredibly technical folks, and like the positive spin on this is to the extent that I know that there were a lot of engineers that candidly had the equivalent of an exciting dream, let's call it, off of the fact that there was I mean, if we think about all of this happening on chain as it relates to Trump and Melania, it's quite incredible that things just didn't kind of fail. I do, however, go back to what does this mean for the broader industry, and I think this is one of the points, maybe, Jack, that you're alluding to, as it relates to now perhaps a bit of what potentially could be signaling a validation in the form of putting it into regulated structures. I do draw some concern on that, namely in the form of how will this be received by the masses?
Yeah.
Right? Because them. Yes, exactly. I mean, because I still have to remember, like, we are fringe. We are very small. We're nowhere near masses. If I think about the conversations I have with family members, and either they've been burned or something's happened before, and like, what does this do in terms of the impression that we leave as to whether or not the industry is filled with serious people, or are the serious people effectively just put into a corner? And so I do think like there's something to be said about that. I probably haven't given too much thought beyond the occasional night sweats. thinking about sort of market liquidity and it being pulled from all various different places. But anyways, now back to the. Sorry, I thought it was going to be a quick caveat. It wasn't.
I love those.
Yeah. So my time at VeChain. So yeah, I head up our institutional growth and capital markets efforts, which I really try to, which is just I guess it's a somewhat fancy way of trying to say I engage directly with professional capital allocators and directly with market or professional market participants, namely traders, large trading shops. And why do I think it's important? Or because what's pretty unique about this technology is there's always a market for like the tokens are a requirement, right? And there's a market for these things 24/7, and it's important that at any point in time, at anywhere in the world, you're able to get a price for something. I think that's really, really, it's something that has always been spoken about, but it's actually it's live and it's true, and we're experimenting and experiencing it today. And so I'm often talking with folks on, hey, how can we improve effectively what we refer to as the liquidity, the ability for at any point in time someone who's looking to purchase or sell any one of the native tokens that are live on VeChain Thor, that they're able to do that, and they're able to do that in a way that doesn't feel as if they're getting a bad price or getting bad execution.
Sure.
So, I mean, that's the capital market side. On the institutional growth side, it's really sharing the narrative and story about, hey, these are the things that the foundation's working on. These are sort of the developments and activities that are taking place. Here's why we think our approach to application and growth is unique and interesting. And here's potentially how you can get involved. And so sharing the various ways or exploring various ways, oftentimes it comes from them. And I think that's really important, is like understanding that if, getting their buy-in and getting them to also be a participant and client in the growth is really important. And perhaps most important is oftentimes their feedback, their thoughts on how they explore it, how they think there are potential use cases that could exist. And the network that we support would be something that's inviting to them. So that's how I spend my time. I'll pause because I feel like I was a little all over the place there.
No,
we can go in any direction.
answered,
it's interesting.
it answered a lot of questions. I think like the space is definitely changing, and maybe the ETFs have led that. Like a lot of the early crypto stuff was very much individuals, retail, probably why the NFT craze went so big, probably why the meme coin craze is happening right now, is that it's not about the underlying technology, the fundamentals, like what problem are you solving? It's very much like, can you make a quick buck? Do you think other people are going to believe in, Trump coin or Melania coin, whatever it's going to be? And you don't really think that that's going to have real world, utility. You don't think that's going to be used for remittances across the world, right? Like you think, is this going to go up and can I get out before it goes down on me or something like that? You know what I mean? So it's like, I think that has changed. That mindset has changed with institutions. You must be aware of this as well. Like you're now speaking to professionals who have research teams who are like, okay, how does this, differ from the other assets? And I think that's something that BTC did quite well. The story was fairly obvious and simple. It's like, this is gold. This is the digital gold, like whatever you want to call it. And they're like, oh, that makes sense. Secure store of value, not going to change much, like, bomb proof, all this kind of stuff. And I think that's why a lot of people said that maybe the Ethereum ETF didn't go as well, still super successful, like you said, but not as well maybe as Bitcoin's, because the narrative's a bit more confused. It's a bit more, oh, actually, this is deeply technical with the settlement layer for the internet. And then, okay, what does that mean? How does that compare to what I understand with traditional markets? It's a bit different, right? That's quite a hard sell. And then you see there's loads of other crypto coins now that are trying to get their own ETFs, trying to get more institutional adoption. How has the response been to VeChain's story? VeChain's an OG in this space, like been around for a long time, well-known brands. Like what's been the kind of the reaction to the story of VeChain?
Yeah, it's been largely positive. And look, I want to couch that with some direct feedback. I'll start. here I go with the caveats again. Alec, the point that you just brought up is brilliant. I know it's something that I missed earlier, but you're absolutely right. I think for the most part, um, if the industry could have, they would have maybe preferred a bit of distance in the availability of ETH ETFs versus
Mm.
Bitcoin ETFs more than the 6 or 7. Let's see, we launched in January, July, so I get that right? Yeah, 6 months between them. So that way, there could have been a much better opportunity to arm and educate the market around what exactly Ethereum is, which I think it's still also, depending on which forums you're in, it's still TBD. But Bitcoin had, like, it had a track record of over a decade of
Mhm.
narrative, both spinning, but then also, the
Hmm.
last half decade or so, solidifying around sort of the gold, the digital gold narrative, and that
Mhm.
helped in terms of adoption. Um, I think it also just helped in the form of there were more folks coming online, more folks buying Bitcoin. The price
Mm.
certainly helped. The return certainly helped, going back to that sort of animal nature in us. Um, and very clearly, there was just more conversations, and it was a very easy narrative, candidly, for
Mhm.
folks who have traditionally, like, if you think about distribution and you think about how folks are, and particularly in this industry, selling products to end clients or investors,
Mhm.
um, the simpler the story, the better, right?
Mhm.
Indexing, buy the market, boom,
Yeah.
done, right? Get your share of corporate earnings, boom,
Mhm.
done,
Mm.
right? I mean, the most innovative, form of collective
Hmm.
capitalistic socialism, like, it's a very easy sell, and then it's just a
Mm.
matter of, like, oh, well, how much is it for me to, how much can I get
Yeah,
access
yeah.
to a broad basket of global stocks?
Mhm.
Oh, you're
Mm.
cheaper, great. Got it. There's
Mm.
more, but still, that's generally it. Um, Ethereum's not that. VeChain's not that. And
Mhm.
so I think, generally speaking, though, the feedback has been surprisingly quite constructive.
Mhm.
Namely, the moment that I go into a conversation and and I say, "Oh, well, I'm Johnny Garcia. I'm a red VeChain now." Inevitably, the first question goes, "Wow, so you really went down market?" Or the first comment is like, "Wow, you really went down market. You're all in." I said, "Yes." And then the second one's like, "Yeah, I know VeChain. I have a little bit. You all were RWA before RWA was even a thing,
Mhm.
Mhm.
right?" And, like, that is that's for me. It's always been, really positive omen, because, uh, candidly speaking, that was one of the things that really attracted me to the foundation. Is it just felt like there's a built up track record of really integral and developments to and evolutions to this entire industry, in the form of, like, there's a very clear narrative, there's a very clear market opportunity. It was going
Mhm.
after it, and it was having success. And so, like, and it was something that it resonated with me.
Mm.
It was clear for me to understand. Um, and so, like, that whenever I get that response, it resonates. Now, the follow-on question is the more difficult. The third comment, right? There's the, "Oh, wow, you really went down market." To Yeah, RWA before RWA was a thing. And the third one's always, "So what are you all doing now?"
Mm.
Yeah.
Okay.
And that's the more difficult question, right?
Mhm.
I mean, because as you know, Alec, I mean, there are a lot of things that we're doing, and I
Mm.
think this is in part one of the potential, not drawbacks, but it's a hurdle for the industry, which is, it is a general purpose technology, and
Mm.
trying to, like, effectively, what they're saying is, like, how are you solving for the problem that I have now?
Mhm.
And from the perspective of an institutional desk, it's, how are you all, like, tell me how you all are growing, show me the evidence for that growth, show me how that's driving value to, like, how are you all attracting new users and driving value to the network, and lastly, how are you going to help me generate, like, what I pass on is a
Yeah.
stream of returns, right? So, like, again, trying to understand exactly the client and who it is that you're engaging with, I think, is incredibly important, and
Mhm.
partnering with them to figure out, oh, okay, got it. It's like, your focus is, I offer up a stream of returns. How is that different from the other things that I'm doing? So that when packaged together, it's unique. It's a great value or sales proposition that I can then make to my end clients. And so that's in essence how, that's the feedback that I've been given, and that's sort of the good, bad, and the not ugly, but the good, bad, and indifferent in terms of how it's been how it's been received so far by the market.
That makes sense. And I think you are right. Like whenever you look at, I mean, RWAs, real world assets, that is kind of the buzzword that was like digital gold, crypto 5 years ago. Now it's all about real world assets. And I think that narrative makes a lot of sense when there are like, say, projects that are basing their entire kind of market cap, transaction volume, all this kind of stuff on meme coins. I think that's a fad. I think that's people trying to, make quick money, as we've spoken about, which is, it's natural, makes sense. But long term, I think there'll be enough people burned that will start to be unappealing and people will no longer go down that route. But the real world asset stuff, like it's something that BlackRock are constantly talking about, JP Morgan are constantly talking about, all these big asset managers. They understand the value of getting, say, traditional assets on chain purely for the same reasons that they understand the value of having, say, the digital gold equivalent. It's representing ownership. It's having something that's uptime, 24/7, consistent. You can get price action around the world, cross border, all this kind of stuff. So that narrative, I think, is going to be the new narrative in a lot of ways. I think it's a kind of a perfect marryment of blockchain technology, but deployed on kind of on top of existing infrastructure. And it's hard to know whether the kind of the peer-to-peer electronic cash system that was the previous narrative will die out, and if it'll be more about these, say. And I think that kind of comes from the tech in a lot of ways. Like, say, we've seen that BTC can't handle the transactions volume that it needs to do to hit the Visa, MasterCard equivalents, but it could handle the selling of contracts, homes, deeds, whatever you want. And I think that kind of the narrative there makes sense, and it's exciting that VeChain has been in that space for so long and is well entrenched into it and has actually been doing these things. And I think as institutions, well, hopefully you'll see this as well, are starting to understand that's the new application. They'll understand that something like VeChain is something they want to be involved in.
Yeah, I agree. It's been interesting because I felt like you're right with the last 3 or 4 years, and still, even today, I would. It depends on who you're talking to. I think folks still think that there's a lot of wind in the wings remaining, or wind in the sails. I think that's how it goes. Wind in the sails remaining around DeFi, right? It was the big DeFi summer, and then folks continue to keep talking about there's still a DeFi resurgence. And candidly speaking, from my particular angle, it is pretty unique to have such things as autonomous settlement to not obviously 100% eliminate counterparty risk, but to reduce it to some fraction of a decimal. Is these are really critical. These are really critical things that are a part of OpEx and operational costs for existing financial services firms. And so, like, it's really interesting to think about that particular application as a use case for continued growth and adoption, particularly from FIs or financial institutions. And you see that happening. Like you mentioned JPM. You also see it happening at your Franklin Templetons of the world, who have their own ecosystem that they've been incorporating, and also have folded into accepted practices, namely covered by existing regulatory requirements. And so, like, it is happening. It's just kind of in the background. And again, it may not be a part of the sort of original or ethos, but it just goes to show you that when you have a general purpose technology, like, folks can continue to borrow from it however they see fit. Much like AI, it's like I guarantee you, all of us are using it in some different form.
Yeah.
Right. And so I think that part is really interesting. The other item that I would just add, just on the last bit here, is the RWA thing has been interesting because it's really, namely, so within this space, it's been interesting hearing the following. There's been two common bits of feedback. One, this industry has largely been an industry of narratives. If we continue to be an industry of narratives, it will not exist in, like, I don't know, 2, 3, half a decade. And the second item is on the RWA side or DeFi side, depending on, like, it feels like there's a bit of a mix here, right? As we start to continue to tokenize, say, financial assets and things of that nature, then you're going to continue to see build out of things like collateral, which is really important for financial institutions who are in the business of shifting and managing risk, right? I mean, I mentioned, like, streams of returns, the opposite of that same coin, is risk, right? You don't get returns without some level of risk. It's again going back to I get a penny on the $10,000 or whatever that I put into my savings account, for the bank to then go out and do what banks do, which is loan it out, and make 4+% on. Anyways, it's another note. But but they're in the business of managing risk, and being as capital efficient as you possibly can. And so that seems to be one of the areas where I know a lot of folks are really exploring. And so improving the quality of your network, of the things that, improving the quality of the network is ultimately really, really important in terms of being able to be perceived as a safeguarded asset that you then could use in collateral or use in other mechanisms where folks are going to continue to evolve and experiment. So that's one of the things I just wanted to highlight.
No, I'm really glad you brought that up. Actually, risk is quite close to my heart, and I think it sounds boring for a lot of people probably, but it's so important to the machinery behind, financial services and ultimately by extension the machinery in lots of things in our lives, right? That we don't directly see, but is so crucial to how the world works. And I think I find it very exciting that now you have all these institutions who are finally taking these things very seriously, taking the risk side of it very seriously. And also, blockchains and major networks like yourselves are taking those steps to meet the demands as well. I think it's a nice, exciting place to be in. Speaking of, where we are now, I just want to close on looking to the future then. So, are we going to see a VeChain ETF in the future? What does that hold? And maybe, more speculative beyond that, or more looking further into the future, maybe. What do you think people should be thinking about going forward in this space as it relates to, maybe not just financial institutions, but, your take on the whole space in general? What do you think we should be thinking about?
Yeah. So I'll tread lightly. That way I don't get any knocks at my door. No, but I think so. I'll back out and say, generally speaking, I think we're going to see more and more ETFs and ETPs. I just think that it's a very low barrier of entry. It's a very low cost to effectively stand up. So I think we're going to see more ETPs. We're going to see more ETFs. They won't just be here in the US. They're going to be, again, it's an instrument that is it is ubiquitous. So you're going to see it in multiple jurisdictions, and it's going to continue. I mean, we see it revolving across a number of industries. It's going to continue to figure out ways in which they can wrap some, like, insert asset here, create ETP on top, finder, provide finder toll fee, right, or collector's fee. I do believe that, look, it is a massive unlock for a number of folks who want to be able to offer this to end clients, because for some clients it's going to be their first exposure ever to crypto, right? Will be through an ETF, and so it's worth taking that perspective as well. So there's going to be a continued sort of proliferation in ETFs, and it's going to continue to eat the fund management world, if you will. So that's certainly a prediction that I see. So you will see more. We certainly see it in the form of filings. I suspect that we'll probably see more that are going to continue to proliferate the space. What should we look forward to? Here's another sort of prediction that I have, which is I'm not entirely sure what it looks like, but the sort of intersection of traditional capital markets and crypto markets sort of merging. And what do I mean by that? Like, there's this thing that we tend to refer to as, like, market structure, right? And I think oftentimes it's sort of lost on us within the industry, in so much as we talk about it very often. But in essence, where there's a market, there's likely a structure. Whether or not it either evolves naturally or it evolves unnaturally in the form of regulations and things of that nature. Yep. And so I do suspect. We have ETFs, we have tokenized assets. I don't know what that looks like in the future. I don't see tokenized assets, out sprinting ETFs in terms of just glumming up or absorbing or sucking up all the assets in the world,
Sure.
right? But I do think that there is going to be some merge and interaction between the two, and we're going to continue to see more and more. And by virtue of that, we're going to continue to see more and more on-chain economy, more and more decentralization, and a sort of like where centralization is much more efficient, scales of economy is much more economically feasible. That's going to continue to exist, but I think alongside you're going to see this sort of intersection of the two taking place. Again, I don't know what exactly that looks like. Some people suspect that it's tokenization. Tokenization of ETFs. I'm probably less optimistic on that particular view, but you will see. I mean, seeing folks going effectively. So we've seen stuff like SPACs, right, and other ways in which you could potentially go make yourself available and have a price. Have a tradable price available for you on a particular, like on a registered exchange. Well, I mean, like you can effectively do that now with crypto. We've talked about memes, but there are potentially going to be, and I know there's views and arguments out there for why memes could be something else, but I think there's also going to be opportunities where you could potentially experience those particular type of liquid events without and providing liquidity and price transparency without having to go the route of, say, the existing sort of registered route.
I think that's a really interesting note to end on, actually, because it is about the intersection, right? And I think it's going to be fascinating to see these two worlds not collide. It's kind of a slow entanglement and marriage of them, right? The traditional financial institutions and this wild west of crypto. That it feels like it's been a marquee year we've just seen for them getting together, and how that plays out, whether the crypto bros end up hating everything because it's all the values captured through these ETFs and products is going to be it's going to be crypto Twitter is going to be interesting for the foreseeable. So that's one prediction I think will definitely come true. But John, it's been an absolute pleasure, Johnny, speaking to you. Thank you so much for your time, and I hope you've enjoyed being on the show. It's been great to have you.
Oh, this has been great. This has been long overdue, and I've been waiting for it. So I really appreciate you all inviting me on. And I listened to you all pretty religiously. So I sincerely appreciate the invitation. It's been an honor. Thanks, Shaq and Annie.
Pleasure's all ours. Thank you, Johnny. And to everyone listening at home, thank you for joining us. And you can see us next week to untangle a little more Web3.